Hello again, everyone. This is Joe, and in this technical analysis of the stock market video, I'm going to do an update on the final Elliott wave that we're in right now, intermediate wave 5 of primary wave 5. So we're going to talk about that, and then we're going to talk about a parabolic situation in the stock market. I'm going to talk about an article that Tom McClellan put out here recently, and I found it very fascinating. And then lastly, I'm also going to take a quick look at an article that McClellan put out about a year ago and see how we're doing right now. So stay tuned. Okay, the first thing we're going to talk about here is this last cycle wave 5. Okay, so I believe that we are in cycle wave 5, which started in August of 1982, and then that's what's going on right now, and that we had primary wave 1, and 1987 crash was primary wave 2, and then the whole move into the January 2000 high was primary wave 3, and then we had this expanded flat that ended in March of 2009, and that we are in the 5th wave here since March of 2009. So the thing that I've done is I've looked at it and said, well, you know, in terms of Elliott wave motive waves, this is a motive wave, this is a motive wave, this is a motive wave, okay? 2 out of the 3 motive waves have a tendency to be equal, okay? They don't have to be exact, and it's not a rule, it's a tendency. So what I did was I measured the high, the weekly high of wave 1, comparing it to the weekly low of when it started here in August, and that was 769, and we come out that the measurement is 3.55 times, okay? And then the actual measurement of wave 3, between 3 and the beginning of wave 3, the end of wave 3 and the beginning of wave 3, was actually 7.3 times, okay, 7.27 exactly. So you could see it was well over twice the magnitude of wave 1. So then my initial estimate was, I said, well, okay, if I take 3.55 times the low here in March of 2009, what do I get? Well, we came out with almost 23,000, 22,968. Well, we're well past that. We're up here at 26,071 close on Friday. So I thought, okay, if it's not 3.55, where are we now? So let me just cross out of this for a minute, go back to my mouse so I can zoom in a little bit. So you look at it and say, okay, the high from this last week of 26,153 compared to the intra-week low in the week ending March 6th, I believe it was, yes, we are 4.04 times. So basically 4 times, 4.0 compared to 3.55. So it's in the same area. It's not exactly equal. It's in the same area. So it puts us very, very close, just comparing the magnitude of 1 with the magnitude of 5. Okay, so this is a motive wave, the second motive wave, and the third motive wave. So the second thing I want to look at is an article that Tom McClellan put out on Thursday, I believe it was, about the parabolic situation in this market. And what he was looking at is this final move here, this move in here. Okay, let's pull up the article. Okay, so what Tom has done is, Tom McClellan, by the way, if you're not following McClellan financial publications, I'm on his email list, so I get his articles. That's free. I don't subscribe to him. I don't agree with everything he puts out, but I do find that he has some very interesting perspectives sometime. And this most recent one was really fascinating. So in the black, you see the Dow Jones Industrial Average, and what he then did was he literally reversed it. And what he was trying to show is that it looks that the end of where we are now is mirroring the beginning in here. And I'm trying to see, he goes in and he talks about it. You know, and he's just basically, he's really saying that it's kind of it was a curiosity to him, and he shows some other comparisons in here. But I thought it was really, really interesting when you start looking at the look and feel of this move in terms of wave 1 and that the opposite, of wave 5, intermediate wave 5 and intermediate wave 1. And it really are, they're curving just in the opposite direction, but they're both doing a similar type shape. So then, okay, my analytical side kicks in. I mean, that's why I've got an engineering undergraduate degree, and I have a tendency to lean towards analytics and math and all that good stuff. So when I looked at it and I said, well, okay, what's the magnitude of this one? And then how does it compare to where we are right now? And it turns out that if you take the intra-week high of intermediate wave 1 and compare it to the low the beginning of it, of 1, it's 1.74 times is the magnitude of what it achieved up in here at 11,258 was the actual intra-week high, okay? So then I sat back and said, okay, well, where are we now? Are we close to, that kind of parabolic top and magnitude? We are very close. If we take 26,153, which is the high of this last week, and compare it down in here, and it doesn't matter whether you pick either one of these points. I picked this point here, February 12th, week ending February 12th with a low of 15,503. I come up with 1.69. So where we hit this last week is 1.69 times the beginning of intermediate wave 5, the final wave. Very, very close to the magnitude of intermediate wave 1. Okay, so similar type analysis in terms of comparing the magnitude of the move, just like I did on the primary waves. I am now comparing it to the intermediate waves within primary wave 5. And if you look at it and say, yeah, this is, when this ends, and we're getting very close, I believe, intermediate wave 5, primary wave 5 of cycle wave 5. And when you scan back out, you see what I'm talking about. This is the picture I'm talking about. Cycle wave 1, 2, 3, sideways 4, and the big move 5. Okay, so that is the picture of what we're doing. That's where we're at. And then the last thing I wanted to talk about was Tom McClellan's interesting article of February last year about crude oil. Okay, so in this article, he talked about how this is something that they had found and have followed for a while. When crude oil, which is in a log scale in here, is set forward 10 years, which means you take this actual tracking of crude oil and you then move it forward 10 years. Like, okay, this was the high of 1920. You move it forward to align with 1930. And they found that the forecasting of this for the stock market, for the Dow Jones Industrial Average, was really very close, okay? Now, again, nothing is ever perfect, but they found it was very close. So look how the oil peaked here, and it predicted a peak in 1929, 1930 on the Dow Industrials. Now, the picture here is not the same, okay? But intermediate wave or primary cycle wave, actually cycle wave 2 right here, that ended in 1942, bottom right in here, close. They had 1933, all right? So the patterns are similar. I mean, look how it went. Look how crude oil went flat in here, and how we, it kind of predicted a flat sideways pattern in Dow Industrials. And then notice here how it peaked in 1981. Now this period in here is a little different from what the Dow is doing, but the Dow peaked in January of 2000, January of 2000. Okay, this oil peaked in 1990. And so when you set it forward 10 years, it put it right into 2000, okay? NASDAQ peaked March of 2000, the Dow peaked January of 2000. So this is really, really interesting. So then look at this low right here in 1998. And of course, when you set forward that 10 years, that's 2008 into 2008, 2009. So then where did crude oil peak? Crude oil peaked in 2008. Remember that? 150. If it wasn't 150, it was very close to $150 a barrel on the futures. And then it literally collapsed, okay? You move that forward to 10 years, where are we? We're at 2018. And so let me go back to what he has tendency to, what he said down here. It lets us see more easily that the uptrend since the 2009 low is just the echo of a similar run up in oil prices a decade earlier. Oil peaked in June 2008, and so adding 10 years to that date gives us June 2018, plus or minus a few months. When we get to the 10-year echo point of crude oil's June tout, the stock market should start to see a serious downturn. So that's a very interesting article by Tom, an interesting comparison of crude oil to the U.S. stock market, the Dow Jones Industrial Average. And, it's just really, really interesting when I focus on the Elliott waves and focus on the Elliott wave structure, focus on the throw over this channel of where we're at, look at the parabolic moves that we're making, look at the magnitude of the percentage moves, whether you look at the intermediate or whether you look at the primary. We're getting very, very close. 2018 is going to be a historic year. Okay, that's it for this video. So everyone have a wonderful weekend. We will talk to you on the next video.